Hello everyone, Jesse Webb, TradersPro. Market conditions have moved back into a bearish state in the bull market. Pretty aggressive selling yesterday after the Fed's announcement, talking more about maintaining interest rates higher for a little bit longer. And certainly markets don't want that at this level. So we saw some pretty aggressive selling. We'll go and look at that S&P chart here in just a minute. But yesterday we talked about this buy-sell ratio, and it still has bears in control. And we had that just kind of that continued overall weakness that has really been muting the overall uptrend. And we've got this counter trend that we're working on, and now starting to see that starting to accelerate to the downside. Let's look at, we saw momentum. We saw momentum tick down to the bearish trend, and that is also accompanied by the breadth indicator moving lower. So a little bit of crack in the overall trend. These are the areas to start to be cautious of watching for continued downside. We're seeing the sentiment. We've been talking about this one as well to see if we'll actually hold up around this level. We've sliced back to the downside here as well. So we'll see if we get some acceleration and work towards that lower range. If we do look at the SPY chart, we talked also yesterday about this potential bullish bar. And so the market is still just being driven by interest rates and inflation. That is the overall that's just the overall interest of what the market is looking forward to, trying to get a direction on what is going to be happening with the Fed and some of that interest rate policy. So we've seen now this is one day to the downside in terms of breaking through this overall momentum location. We could test this 382 level, which is around 432 on S&P 500. Futures are already down quite a bit this morning, so we could see a gap lower. We'll see if we gap lower and then see if we get any kind of buy. Goodness, I'm sorry. If we get any buy activity happening around those levels, if not, we could see some acceleration. We do still have this overall long-term trend in the upside. That's the bullish state of the market right now. But again, obviously working through this long counter trend as the markets try to decide what the heck the Fed is going to be doing moving forward, and interest rates as well. If we look at bonds and look at the TLT, you can see we have that TLT chart is just continuing to the downside. This is bonds. So as bonds are moving lower, interest rates are moving higher. So in this case, we really are in a nasty downtrend for bonds and potentially testing this low point around that 92.20 on TLT. That's the 20-year Treasury ETF. And if we're at that level where we certainly need to see some support. Bonds need to start to go this direction in order for interest rates to go this direction. And I don't think unless we see that starting to happen, the markets are going to find any kind of support right here. So the two are really correlated right here, and we definitely want to see a rally in bonds in order for the equity markets to kind of get a perspective on interest rates finally stopping or being at a level that they can start to anticipate what the future looks like. The overall indexes, if we take a look at, we've been talking about the Dow here lately in this buy-sell ratio. We're continuing to see that accelerate to the downside. Again, if we go back and look at that buy-sell ratio, right now it's sitting at 0.37. So significant market lows are down in the 0.1510 area. When we start to look like this and we're getting that range that's happening here, we're not quite at that point yet. And we talked also yesterday about the divergence in price activity when that looking like it starts to squeeze together. So we could see an acceleration back up. Again, a lot of times this does not also last that long. So we'll watch to see if we get any support and any kind of buying indication or buying activity on any kind of gaps lower. If not, we can see acceleration to the downside. We'll be watching for that 382 level of support. Let's take a look at the muscle stocks group. We actually did see a pop in oil. So NR, top of the list. Also seeing some gold stocks starting to light up here. HMY, which is Harmony Gold. And so money moving over into what it perceives to be safer type of stocks. And in this case, it's been oil and gold. And those could continue to be the current trend and the current play. A big 8% move as the market is retracing. That's a significant move over into gold. So keep an eye on some of these other stocks. There may be others that are in that list. Let's see if this one is also gold. Nope. Thought maybe with that symbol that might be there. They're going to be U.S. Steel is in there as well. Seeing some interest. That's a good looking price pattern. In fact, let's go back and let me go along here from HMY just in the new buys. DMRC in the upper range of that zone, the momentum zone. Again, what that means is that we're in this upper range right here. But typically, you either have to look at the stocks, oil and gold, something that's counter trend to the market. There's still going to be potential performance issues when the market is in a downtrend because it's the baby in the bathwater idea that all stocks are going to get thrown out when markets start to drop. But we will definitely start to see some selective pockets on individual stocks, and so we'll keep an eye on some of those going into the next few days. Medical, we're also seeing a pop in medical and biotech, some finance stocks. There's some buyouts in there still. KNDI, they're the overall move. Not a really exciting list in there today. Just some gold and some oil to keep an eye on for this market retracement. That'll do it for today's update. Everybody have a fantastic day today.